Chris. I'll kick it back to you to start. All right, today's current crypto asset market looks about $300 billion in total value. About half of that resides in Bitcoin. Chris, could you maybe say some brief words on how you view that whole thing? Is some overvalued, undervalued, etc.?
Sure. So there's all manner of pitches in this space, and there is all manner of confusion. And just real quick, show of hands, how many of you are new to blockchain?
You missed mine.
Oh, I did? Oh, then I apologize. I'm sorry. I was
got
going
to mix that.
Yeah, so anyways, okay, good. So yeah, it's very hard, I think, to separate some of the ideas from actionable and internalizable output from ourselves. And so we hear many different definitions and words and ideas in the space. It seems to me that we have roughly a division in terms of cryptocurrency and tokens. It seems that cryptocurrencies aim to be money in some capacity, and tokens aim to be equity in some capacity. Dangerous word, I get it. Utility, perhaps, might be more politically correct. No? Okay, we'll get to that then. In any case, personally, I think that the cryptocurrencies themselves hold the most potential. I think that it is a little bit strange to me that in some cases today we're hearing these pitches whereby somebody tells us that effectively their IOU or that sort of ability to speak for a community would be a voucher that would be expected onto others for some degree of sacrifice. It's a very hard separation in my mind of something that has a degree of sanctity, as we see in money, and a receipt. And like that sort of like division is how I see things, is that you get either a form of bond or receipt or commitment, and then you get a scarce token in terms of the community faith. Like those are the two umbrellas. I myself like to look for where the sacrifices are happening. The sweat equity is happening by individuals that are not affiliated with a center authority, and we can get into that.
I think I would summarize that as, Chris, you generally like Satoshi's vision of a decentralized money, and you're a bit more skeptic at all the other thousands of tokens. But really saw Alex squirming here, so I'd like
to get him on.
No, it's funny, right? We were talking about this a little bit earlier. A few of us were sitting around, and we're all constantly pitched and talked to about these new projects, and everyone's going to have their own currency, and this currency is going to have utility because people can only buy whatever good or service or investment using said currency, and that just doesn't make sense. Like if I'm looking at this from a venture engineering standpoint, how can we have 8,000 or 3,000 or 1,000 different currencies that are exclusive only to that? I mean, there's a reason why there's like the US dollar reigns supreme. Like most of that's because petrol, like that's how we buy petrol and whatnot. But like PayPal does, you don't go into PayPal or eBay and buy an eBay coin yet. I mean, but if there was an eBay coin, a 10-cent coin, or this coin or that coin, you had 1,000 Toys R Us coin, it would just be really unmanageable. So from a venture engineering standpoint, when I talk to a lot of these startups, I look at them and I laugh because it just it doesn't make sense. There has to be some sort of like commonality, or you need some type of interoperability or exchange, or like some type of exchange.
What about like gift cards though? When you go out and you buy a gift card for a certain, aren't you buying currency in that?
You are, but it's so much the founding principle, like the business strategy of Amazon does not rest upon Amazon gift cards.
So can I disagree with the whole premise of this conversation?
Go for it.
All right, so we're gonna get interesting. So here's how I look at it. And my worldview may be skewed, but I grew up in the world where I learned most of what I got from Chris Derose's podcast, right? So I'm a reformed Bitcoin maximalist. So I appreciate the idea behind sound money and the fact that an asset that exists on a ledger that's secured by cryptography might represent money. And I think many of them, that's where we started, and that's what some tokens do. But a token is really nothing. It's a piece of data that corresponds to something that has a verifiable chain of custody in a blockchain. That token may represent some type of medium of exchange, like funny money for your company, or like Disney dollars if you want private currency, but it doesn't have to. And so the old paradigm was that anything that's not Bitcoin, because it lacks the security model and it lacks the network effects, and it was sold or pre-mined and all this stuff. I get it, and that's from a sound money perspective not going to work. And if that's what your token does, I think you have a very bearish, in my opinion, a bearish case for the utility of your token. All that said, tokens can do a lot of things. They can represent things in the real world, which is where we have this concept like the security tokens these days. We can tokenize real assets or limited partnership interests, that sort of thing. And then they can also represent a mechanism for aligning incentives in a distributed way without a centralized intermediary being the higher power to enforce the rules of an ecosystem. So I just want to frame the conversation that when we talk cryptocurrencies, it would be like referring to my car as a horseless carriage. Like, it started out as a horseless carriage and it became a lot more. And cryptocurrencies started out as sound money, tokens came about, they started out as a private payment rail for a platform, and they've evolved into something much more. And so I think my belief is that we need to keep a broader view of what these tokens are and what they can do.
So, in my opinion, a lot of the criticisms around these alternative monies stems from the fact that currency and really money is kind of a winner-take-all market. It sounds like you guys are generally skeptical on a lot of these other altcoins that might do things different than currencies, but you are perhaps bullish in sort of the tokenization of real-world assets like real estate or maybe some tokenized commodity. I guess, would that reign true with all of you? If it's going to be a cryptocurrency or some sort of decentralized technology, it needs to be money, or else the only other sort of tokenized thing that makes sense is sort of a real asset? Or can you provide some example of a crypto that makes sense that's not another money or some sort of tokenized existing asset?
I certainly can. So I think, we have this thing called the utility token, which is something that's been taken and tortured and perverted, and it kind of lost its meaning. But I do believe that unlike, you can value something like a Bitcoin by looking at how people value money or currency, and you can value tokenized equity with a discounted cash flow analysis. But what a utility token in its truest form allows you to do is to monetize a network effect, is what I believe. So you have things like token curated registries and different, what they call now these crypto economic primitives, where you're monetizing something that previously went unmonetized. So the example I give is we would probably pay for TCP/IP if we had a way to pay for it. We just haven't up to this point. And so that's where I think tokens come into play, is monetizing things in a way that's not an interest in it, and it's not equity, it's not debt, it's not money, but it's capturing network effects of an ecosystem where people contribute work, which has some value.
Yeah. No, I would add to that. I think the tokens make a lot of sense, but not when mapped to real-world assets. I think as soon as you map it to a real-world asset, you now are subject to all of the regulatory pressures that would have existed before blockchain, and so I don't see what is different at that point, other than, I suppose, you're using this sort of network that adds additional risk, maybe. So I'm skeptical about that, but I think that
If I could jump in,
sure.
Maybe it's easier to transfer. It's more transparent. Yeah, for audit purposes. Does any of that make sense? As why?
It would, other than I think the entirety of the existence of these networks is that they arbitrage regulations, and so the friction that is reduced is in fact regulatory reduction. So like it used to be that if you wanted to offer shares in a real estate venture, you would have to get all kinds of licenses for that. The original Howey test applied. It seems that with blockchain now, the regulations have been moved aside, so any reduction in friction would probably just represent that reduction in enforcement, which is okay, and which I'm fine with, but I'm skeptical will continue. So like one of the reasons we can't say securities is because it is illegal to offer security generally, but there's this pretense that's being offered in the blockchain markets that seems so far to be working. We'll see if it does or doesn't, where you have some share of a larger whole operation, and that there is some pretense of security there. So I'm a little skeptical of that. I see in-game assets online as being a very great use for tokens. I think that things like in-game weapons, we saw this with Counter-Strike. They had a skin market that developed, which was scandalous, as these things often intend to be. But you would have the gun skins would have value outside of the game world for various reasons. And I think that would map over to blockchain. The collectible art market, I actually think, is a very promising segment of the space.
And the new cool way to fundraise in cryptocurrency, referred to as an ICO or initial coin offering, for those of you who are aware. So call it maybe 10 years ago, if you're going to try and start a new company, you'd probably have to go try and sell equity, or maybe a simple agreement for future equity to investors. Then crypto sort of discovered the fact that, hey, we have this decentralized currency. What if I just offer my new coins in exchange for something like Bitcoin? So I'll just promise to give you these new tokens. And now we've seen about $20 billion of ICO funding, which is more than 5 times the amount of blockchain VC that has been raised. So obviously entrepreneurs are doing that for a reason. I think it's mostly because you can access a huge investor pool and get this global audience. Curious to see if you guys stand on the sort of pro ICO side, the negative ICO side, or what are the real, really like what makes a good ICO from a bad ICO, then should these exist at all, maybe in some cases, but any of you guys can jump on this one.
Yeah, I'd be happy to. So I'm advising a few impact blockchain companies because, as I mentioned, everything we focus on is impactful. So one of them, we're creating this like kind of architecture neutral carbon credit system. We're buying them. Part of the proceeds from the ICO, some people call it an STO now, right? Security token offering. In blockchain, there's a new jargon that's created every week. And so, we're buying this rainforest and then we're creating these, or we'll be creating these, like I was saying, architecture neutral carbon credit systems that are exchange on a DAX. So, it doesn't matter. The problem they're solving is that there's huge double spending issues with carbon credits. There's huge fraud. You put these things onto a blockchain, a lot of that gets eliminated. And the way we're doing it is we're just keeping everything private. And that's the same with two of the other companies I'm working with. One is digitizing the rehab industry, the treatment of drug addicts and alcoholics industry, as well as the Smart and Sustainable Cities Initiative, a $1 billion contract with São Paulo in Brazil. But we're trying to keep everything private. We're not trying to do this crowd-funded, 1 million people each giving $1,000 type of deal. We're trying to keep everything very private, dealing with accredited investors, funds, family offices, and that's why they've tapped me to kind of guide them in that. So that's how we're doing it.
So it sounds like you're at least not doing a public offering. Are you doing an agreement that then converts into tokens in the future?
Yeah, so there's an agreement. One of them is doing something funky with airdrops where people are giving money up front and then they get airdropped down the road so that way they don't incur tax liability up front. So it's all private things. We're not trying to do a crowd.
For some context for the audience, the big issue here is the question of, okay, are these ICOs even legal? Is this considered an illegal public offering? Do you need to file, all the U.S. registrations you need to, or is the fact that you're just taking money from people everywhere somehow okay because this is cryptocurrency and normal laws don't apply? So the whole idea here is, some venues have been proposed, like maybe you could do some of the the funding for these tokens to private investors that are all accredited, and then not do a sale onto the open market and just sort of drop new tokens to all Ethereum addresses or something. But just a little bit of context. But go ahead, back to the yay or nay.
Let me give my my very brief, try not to fall asleep on me, crypto law 101, right? So surprise, surprise, laws in the United States are very complicated. We can start from that premise. There's federal, state, and state laws, right? Mostly what we're concerned about here are the federal securities laws. There's some state stuff, but that's typically what people tend to raise when you're talking about a token sale. And the question is, are you selling securities? Nothing is illegal about that. However, if you're going to sell securities, there are rules that you have to follow, right? So you have to register your offering with the SEC unless there is some exemption that applies that would make it not subject to registration. The question here is, when you have a cryptographic token, right, or a token, that's probably not a good way to describe it, a token that exists on a blockchain, and you sell that to somebody, is that the sale of a security, which would be subject to regulation, or are you selling something that's more akin to Kickstarter? You can crowdfund things on Kickstarter till you're blue in the face and there's no securities laws implication. The problem is we've got this unique thing in the law in the United States called an investment contract, which is defined by this case from the 1950s about selling orange groves, right? It's called the Howey test. And it was some guy on this land, and there was these beautiful orange groves, and these guys from New York would come, and they loved it because it smelled nice, and it was like wide open and quiet, and it was great. So he said, you want to buy this land? Because if you, rich guy from New York, will buy this land, I'll take care of it. I'll plant the oranges, I'll make sure they are healthy, I'll pick them, and I'll sell them. All you have to do is pay me money. Turns out that selling those orange groves in that matter was selling a security, according to the United States Supreme Court. So the question is, are these tokens more like Howey's orange grows or more like the t-shirt that I got on Kickstarter? And the analysis is very nuanced. So I would disagree with the premise that most of these projects are approaching the market from this is hyper advanced and therefore laws don't apply. I think that there are credible arguments for why these things are not in fact subject to the regime of securities laws. All that said, in this environment that we're in today, when you are selling tokens to capitalize a company, very likely that you're going to be subject to securities laws, at least on the sale, right? Once you have a distributed and decentralized network, maybe a different story. But if you're going to be capitalizing a company, people are going to put money at risk, and then your efforts are going to bring it to market, you're probably within the realm of the securities laws there. So there's a lot of nuance. Happy to belabor the point, but I don't want to dominate the discussion.
Well, one thing I'll say about this, my hope to you is that these words that come out of my mouth might be the most important words you hear about blockchain for a little while. These guys may agree. Blockchain as an innovation is the innovation of bearer instruments online. And very much in the way that, like, we just did a cannabis panel here, and the question of, like, is that legal? Nobody knows. Like, apparently it's more legal than it was, but nobody knows. I think that is also true of bearer instruments in 2018. Bearer instruments used to exist as forms of paper. When you bought a share in a company, you got a certificate. It didn't have your name on it. It was more or less a piece of paper that functioned in the way that money might, in that it's not tied to your name. And that changed over the years to registered instruments, in part because of money laundering concerns and things like that. And now with blockchain, we have bearer instruments again, although in a digital form. And you can do a lot of research on that if you like, but in my estimation, nobody knows if those are legal or not, but it seems like they're more legal than they were, and almost all of this falls out of that. And that would be kind of how I see it. I don't know if you guys agree or not.
So Matt, what do you think going forward has in for us on the regulatory side? What does the future hold?
Greater uncertainty, most likely. You know, I think we've gotten out of for 2018, we've gotten what we're going to get out of the SEC. But let me caveat that by saying there's a patchwork of regulations. You've got securities regulators, which is like the flavor of the week because of these ICOs, but that's not where it started. Back in the good old days of Bitcoin, this was entirely a money transmission and FinCEN concern, right? So now that people are selling these things for great riches, there's going to be a bunch of tax problems that come in. What's the basis on something that was airdropped to you that you didn't want? What's the basis on a hard fork where you claim the asset? So the issues will be ridiculous. All the lawyers in the room are going to get very wealthy over the next few years, but it's very tough. And I wish I could give you guys like a little bit of hope that it's going to be easier to navigate this from a business environment, but it's not. And you need to make sure you're well advised and well researched so that you don't wind up in a world of pain.
So I would like to, most of this conversation has obviously been focused around these sort of public assets and investing in ICOs, et cetera. William, I would like to hear, how are some businesses using blockchain that are not so interested in the currency, pure money speculation type of use case?
Yeah, I mean, that's what I'm excited about the most, sort of controlling other technologies. So I work on self-driving car technology, and we're looking at how can we use blockchain to sort of control what happens in that space. You know, you imagine you're in the parking lot here, you have a self-driving car, and it pulls into the spot, and then you have a robot parking attendant, right? And it says, you're not allowed to park here. And the other one says, no, I could park here. And the other one says, no, I said you could not park here. And so you're going to have this sort of verifiable chain of this interaction, saying at 7:02 a.m., you gave me permission to park in this spot. And then more serious things, like this one blew a stop sign and then hit this other car. Did the computer on there see the stop sign? Did it register? So all of that data and interaction from this autonomous world that's about to show up, I think we're going to need these kinds of technologies to control it. We were talking about like spam and having messages show up on your phone. Right now, it's very easy for you to tell it's not a real message. Right? It's not someone you actually know. But with the AI that we're seeing, hit just in the last couple of years, it's really going to be able to fake the voice and the images, and you're not going to really be able to know. So I think we're going to need this kind of technology to verify who's sending me this message, who's interacting with this. One of the other things we're looking at is sort of medical data, and if AI goes into your charts and it's trying to build a study of what different disease patterns look like, and it's going to go through everybody's chart in the hospital, let's say. Well, what part of your chart did it access? Who accessed it? What startup got your medical scan, and are they profiting off that? So your data point went into their company. I think we'd want to know, whose data went into that tool.
If I could push for a second, I guess, what's the huge allure of blockchain in all of this? Is it an immutable place to store this data so that we know that nobody can tamper with the medical records later, which also has privacy implications, but what's the huge blockchain?
Yeah, like did anyone even go into the cookie jar? So if it's sort of on the chain, you can say at this time my sort of, temperature and blood pressure and everything was accessed by this group. And so I'd know who sort of accessed that.
I guess if I can push further on another example, maybe the one with like self-driving cars and taking in all these data points and automatically paying tolls. Why can't that just be done like bank to bank, just hit like a Chase API and move money? What is?
I think, I think it's just sort of the volume of these transactions. We were talking earlier, like would we send exchange receipts for all the words that we said to each other? No. But in the AI sort of ecosystem, they're going to do that. There's going to be so many like microservices. You were saying monetizing things that aren't really monetized now. Like something like Netflix, we pay per month. Why don't we pay per minute? You could have sort of all kinds of different models where the service like Hey Siri or Hey Google or something like that, or Hey Alexa, we don't pay per query. But very soon, and lots of businesses do now, are starting to pay per query. And so having these sort of micro bucks that you can send around, and seeing like an ecosystem of these AI agents that are trading these tokens around with each other. Some of them might be, so they have financial assets, but others might just be permission to access different networks. And you say, hey Alexa, I want to do this, and Alexa will go out, and you'll have to authorize your Alexa or your Google to spend some money. I'm authorizing you to spend up to 15 cents of my to go and accomplish this thing that I've asked you to do, set up this appointment or something. So you want to give them like an allowance to do those things.
What do you other guys see as big like B2B use cases? I hear supply chain mentioned a lot, sort of checking in at each location that my fish was first in the sea, and then on this truck, and then in this grocery store. What other huge potential applications do you guys see on the enterprise front? Go ahead, Chris.
So yeah, there's a lot of stuff that is actually happening, and some of it's fairly complicated. I like what is being done in the gift card markets and in various liquidity solutions that are out there to provide routable value in the international economies. We can get into that, but I'm going to spare you guys those gory details. I think what's really interesting is a lot of the governance stuff that's happening. I haven't seen any phenomenons on the internet capture people's identity in a way that blockchain has. Meaning, you are a Bitcoiner, or you are a Dash person, or you are an Ethereum-er, and people attach to this as a matter of like group inclusion and self-esteem, comprehension, et cetera, and that is lending itself to governance solutions. And then you say, well, why do we need governance solutions? Well, if we're doing more international business, if the globalization is really happening, and we are able to do business now between entities in ways that haven't really existed inside the current financial system, well, we're going to need to rectify discrepancies and disputes outside the current legal system. So if right now I can't send value to China for something without going through a lot of regulatory overhead, fine, so be it. But now blockchain comes. Now I can remit value, but lo and behold, I'm missing a solution for resolving disputes, and I'm seeing more and more action happening there. And I think that there's a lot of potential there, not least of which is because if self-esteem is coupled with these solutions, then there is real losses that are incurred in a reputational sense for not performing on these services. So I think that that's where we'll probably see the most. And this kind of gets into the currency side of things as well. I think the problem I have with a lot of the solutions out there on the supply chain side, I've talked to plenty of people there, the sort of schemes required, like the entire shipping industry use this form of IOU or receipt for goods and services, and I just don't see that people are willing to sacrifice absent some degree of governance and identity. And so I think that, for me, the governance side of things is where it really gets kind of interesting now.
So I would agree that from a private enterprise, let's start from the premise that like a blockchain is it's a type of building material. It's like cement. If you're building a log cabin, you probably don't need it. So like we start from the premise that if you're a private industry, the likelihood that a blockchain is going to help your business is not high. It may, but it's a very slow and expensive database essentially. So it doesn't work in a lot of scenarios. I happen to agree with Chris that I think the non-monetary implications of the technology are most interesting right now. That could change, but I like the idea that whereas the internet gives you digital abundance, blockchain gives you digital scarcity, and we live in a time when we have a problem with the truth in this world, and blockchain can give you like some reference point for the ground truth, right? So that's how I look at it. It's when you have a conglomerate of different companies like in the shipping industry, you may want to look at cargo manifests, but you may not want to show the cargo that you're carrying for this client or this government, but you want to expose to this port because this is where shipping company A's product is coming off, and you can limit access to these things. You can have a verifiable audit trail of who saw it, and you can prove this through some verifiable ground truth that nobody disputes the accuracy of. And I think that's some of the more interesting applications of the technology in private enterprise.
Cool. Well, we have about 12 minutes left. I wanted to save some room at the end for Q&A, so I think I'll do my final question. I think we're all Bitcoin bulls on this stage, obviously. We've all kind of staked our reputation on this whole crypto thing. So Alex and the rest of the panel, why is Bitcoin not $50,000 yet? What's holding this thing back?
Starting with me. I mean, I saw two things. One was I saw a huge hype. I mean, we were talking about this earlier, like when we went to Miami, and Mo Levin's on stage saying about how 3 weeks before he thought he had 800 people, might have to shut it down, and then all of a sudden it's 4,500 people. Like that just shows huge hype. And that's one. Two is all the regulatory stuff. So with if there's one thing, like Willie Woo's always saying, is you got to move fast, right? You got to move fast in this game because from a trading perspective or price perspective, which I'm agnostic pretty much, by the way. I'm agnostic price because I'm looking at things with a 12-year time horizon. I don't even look at like the price. And but it's anyway. So but you got to move fast because there's so much scams. There was so much pumping and dumping. There's still some like crazy syndicates that are still doing this stuff. And the moment like a hint of regulation crept in, a lot of these people got out, and people are still doing things. There's going to be more fallout. We had like an 80% drawdown. I mean, and that's just I think the first of a couple of kind of major meltdowns. I think there's going to be more. This has been said ad nauseum by other speakers around the world, but this is. We haven't even hit Netscape yet. Like, if we were going to make an analogy to the 1990s, right? We haven't even hit Netscape. So we don't know what the next Google is. I still remember using Alta Vista growing up. I remember using Ask Jeeves. I can't even go to that domain anymore. So we're going to see what happens.
Yeah, I think exactly. I think it's just a little bit too technical. Like you said, we're in that 80s internet era, Commodore 64 kind of thing. And imagine sort of moving that forward. Like none of that really made it into the future. Right? It's not like there's still some Commodore plugged in and it's not like hosting a website or something. And so I think it's still really technical. There's still some serious barriers to entry. I think especially like emotional ones. Like if I click the wrong button, if I hit paste wrong, where did my money go? Who do I call? Right? Is there an insurance company if I paste in the wrong address? All these kinds of questions. Like who do you call? I was talking to some folks like, is there a phone number? Is there a phone number you can just call and say, we were joking earlier, one Bitcoin, please. Right? I was actually just at but it's getting there. It's transitioning really fast. I was just at the gas station in Deerfield Beach, and they had the ATM right there, Bitcoin ATM, right? And I was shocked. I was like, wow. What's that? Oh, I know, right? A 3D printer was like printing them out. In the early days, you guys saw like on eBay, they were like selling these like metal coins.
All right, enough bearishness, Matt. Tell us what
ETF. Well, so yes, where's the price? Who knows? I think we got out a little over our skis a little bit this last year. We're still very early days. One of the things you talk about, like 21st century systems like custody and insurance, one of the things that people think may come this year or the next is an ETF. That's like a security that can be traded through your Schwab account or wherever that would allow you access to these assets. So I would say that will probably, to the extent it happens, drive the price. But I think the more important thing will be organic adoption, the maturation of the industry, and then the shift in the mindset that this is not like the old world. The whole point of cryptocurrencies was self-sovereignty here. Like you are your bank, right? You're controlling what happens. You're not relying on third parties. So until the populace starts to think in these terms, it'll probably be just a big speculative thing. But as use picks up and education ramps up, I expect that we'll see similar reaction to that exciting news as we did this past year.
Bitcoiners ascribe to the politics of inevitability, such that it is inevitable that we will have a $50,000 Bitcoin. And then at that time, if and when it happens, it would be inevitable that we have a $1 million Bitcoin. And that's good for the space, and that's polite in the space, and I think that's fine. But in my mind, if you don't ascribe to those politics, if you are outside the space, you don't have that prerogative. You don't have to believe that Bitcoin will be $50,000. And if you look at it from that point of view, the question is, well, why don't they see that as inevitable? And I think it's entirely regulatory. I think that what will happen, probably, but not certainly, is that we will see an ETF. And I think from there, what will happen, probably, but not certainly, is that we'll see guidance from the Federal Reserve even in a way where, hopefully, Bitcoin will displace gold as a reserve currency for the world. And so until we get that guidance, until they ascribe to some of the politics of inevitability, I think the price is a completely accurate price at, $8,000. So that is effectively what happens. I think that the way to do that is probably through regulatory capture in varying ways, where we ask our politicians to represent us in our crypto interests, and in doing so, it then trickles down to the stages of government where they need to ascribe to this politics with us. And it's a process. It may happen or may not. I think most of the people on stage here are betting on it happening.
Well, thank you to our panelists, and I will stop asking questions now and pass it to you guys, so feel free to come up to the middle.
So think about WhatsApp. We looked at WhatsApp from a very US-centric perspective. We didn't understand why people needed to make phone calls for pennies. So if you look at Bitcoin or blockchain, are we essentially in the same boat where we're looking at it from a US-centric perspective, digital gold, I get the value of that, I get the value of the blockchain. But if we look at it from a Korean perspective, or a Chinese perspective, or an Australian perspective, is it a little different, and are we missing that in this conversation?
I mean, we were talking about this earlier, that the developing world is going to see the most usage and the most value out of these digital assets. And so we were talking about revitalizing small island economies like the Bahamas. I was talking about a project we're doing down the Bahamas. One of my friends is down in the Nigerian Delta, and you can think of it more than just currency, right? It's a transfer of value and verification and like operating in trustless environments. And they're verifying that oil cleanups, environmental cleanups, or project management is happening. So, and people down there, one of the investors I work with, for instance, has a crypto company that's doing 27 million a month in transfers. And it's because in Africa, they've been used to digital cash. Whereas in the US, they're like, why do we need that? We've got Venmo. But in Africa, it's much, I mean, even losing 10% in a day on Bitcoin is much more stable than like the Zimbabwean dollar hitting 1 million to 1 currency exchange rate. You guys?
I agree. We're very blessed to have first world infrastructure, and in Africa they've got no banks, but they have 4G internet connection. So certainly the underbanked and the lesser privileged world from a sound money cryptocurrency perspective probably stands to gain more in comparison to the first world.
The micro lending opportunities, talking about sort of raising ICOs, people, they might want to raise $10, right? It could be a game changer.
One of the things I'll say real quick on this, it's really hard to have a conversation on blockchain because it is so political. And like in my mind, regulatory arbitrage, this notion of complying with the regulations in a way that maybe defeats the spirit of the regulations, is oftentimes where we see inefficiency. And that becomes particularly noble in the case of international relations. So look at Venezuela, where we have an economy developing amongst people who are in a generally tough spot because they're able to program computers, and so they work for cryptocurrency, and then this creates a market. And it's this wonderful solution that is totally 100% against the law in Venezuela, but in a way that we can all get behind because it's a reasonable outcome. And so, yeah, it's unfortunate to me because the sensitivities as it could apply potentially to America prevent us from exploring how they could apply outside of America in a way that is very like pro-American and pro-noble end. So that's just weird. You'll see that in the space as a recurring theme. It's frustrating to me.
So I get to work in that smart cities infrastructure space and talk to city leaders and industry partners around the world. So Alex, you mentioned this, well, actually, usually we talk about public-private partnerships, but you talked about this project that you're doing in Sao Paulo, and it's private. Could you explain a little bit more about, so governments using cryptocurrency to fund their infrastructure projects in other places around the world?
Yeah, I'd love
Could
to.
you just expand on that a little bit more? Because there's a lot of places that are looking to fund some of their projects.
Yes, what we're doing is we're capitalizing the company using this ICO method, but it's all private, pre-sale, whatever. What they're doing is they're creating an investment platform. Think of it almost as like an online shopping, so Amazon for infrastructure. And you go on there and you crowdsource these local initiatives that need to be done. They're starting with putting in smart lights and smart sensors and video cameras in Sao Paulo, trying to turn it into a very safe city. So increased lighting, et cetera. And then they're taking all these data measurements. So people are buying in voting kind of on which projects they want using their coin, funding that, and then the Build Coin Foundation is then kind of funding the pre-research phase. So the pre-research phase of a lot of these infrastructure projects can take up to 10 years because from a political point of view, it's not beneficial to anyone. I don't know if anyone follows New Jersey politics, but you'll see that there. And so it's going from 10 to 2 years with kind of this neutral evaluator drawing up these academic articles on what needs to be done, how it needs to be done, all crowdsourced and then paid for, and kind of this crypto platform is what they're doing. They're called the Build Coin Foundation. Yeah.
I just have to follow up with that I was having some discussions with some friends about governance on Mars when we go off the planet, and that's basically what we were doing, letting citizens vote with their tokens. Anyways, my questions real quick. Chris, for you, you made a statement about having an issue with tokens tied to assets. Were you making a distinction there between fungible and non-fungible?
No, that's actually a separate frontier even, if you will. Generally, the efficiency you find in blockchain is being decoupled from government enforcement efforts in some capacity. So I don't know, I don't want to comment on any specific project, but maybe you want to fundraise for something from Americans in a country where like there is no access to fundraising. The problems that happen when they're correlated with real world assets is that you immediately hit the regulatory encumbrances of local governments. So if we did like in-game assets, local governments have no jurisdiction there. But if we do it outside of the game, well, you're immediately now violating laws that apply to like real estate law or securities law or something.
Got it. Yeah. Okay. You made a good point about the countries that don't have banks and banked, and yeah, Americans need to get a broader perspective. But since we're here in America, can you speak a little bit about regulation from the state versus a federal level? I'm dealing with people that are trying to make change, and that's a big issue.
So that's a really complicated question. We kind of talked at the federal level. That's typically your three-letter agencies: IRS, SEC, and the CFTC, four-letter agency. The state level is typically only adding on to those things. So if you're compliant with most of the federal stuff, on the security side, you're probably okay on the state side. There's some blue sky laws you got to worry about, but what you really find at the state level is a money transmission thing. So it's complicated because these tokens can be anything. Your token might represent a share, a piece of real estate, in which case it's probably subject to the real estate laws of the state, right? Maybe it represents a share of equity in a venture, in which case it's subject certainly to federal securities laws, but maybe also those of the state. And then if it's convertible virtual currency as defined by the Treasury Department, you have to comply with what FinCEN says is an anti-money laundering and know your customer rules, but also what the state says you have to do with regard to money transmission, right? And then so it's a patchwork of regulations, and it's not a great answer because it's entirely dependent on what this digital asset is. And there's no one thing. This is a token, therefore we know where we are. I call them the legal platypus because we just don't really know how to classify them in many scenarios. Sometimes they implicate both. Like my personal belief is, we've seen this with the case of Ethereum, right, where something might be sold as part of a securities transaction. We don't know if that was the case, but it no longer is at some stage in its life cycle. It's probably a commodity subject to that regime. So these things are so new, they're transforming, and it's hard to say, but I feel your pain, and I've advised a number of ventures from the early stage to the Fortune 100 level that could not wrap their head around it and had to shelve very transformative and potentially disruptive ideas because we're in an environment where it's very, very difficult to navigate.
I want to add to that real quick. And you're going to hate this, but it's very reasonable to have a complete and total ignorance of the law in many senses, because like we had a cannabis panel, and like the simple question is, is what you're doing legal? Nobody knows the answer to. I don't think anyone in this room knows the answer to. I don't think the attorneys know the answer to. And like it's cynical to say then that like law isn't important. But I don't feel that way. I think that it has to be that you have to be responsible to society in any number of ways. So you as a potential leader are going to go into the woods, into the unknown, and you're going to find out for society what was right, what was wrong out there. And for that, hopefully you will be handsomely rewarded. Unfortunately, sometimes very noble people do that and end up in jail. And that's why it's courageous. And I don't know that there's a better way. It's perhaps necessary, if not sufficient. but that seems to be the best society we've been able to manage. So I don't know if that offends you or not, but.
Yeah, look, Uber
Yeah.
started operating in jurisdictions without a taxi license,
Yeah.
right? So you have to blaze new trails in the industry sometimes. That said, a lot of the folks up to this point who've been arrested or severely fined for the cryptocurrency space, they would have been arrested or fined whether this thing was a token or a dollar, right? That it's just illegal regardless, and there's no excuse for being ignorant of why, you can't facilitate murder for hire, right? If you want to take our
Yeah,
something like that. Okay, so I don't hate it, I don't disagree with you, but just, if it was illegal in the 20th century, it's probably still legal now, even if you say it's some fancy technology.
Before we close, I just want to say that if anyone would like to learn more, a lot of us will be at Blockchain Shift. It's October 11th and 12th in Miami. So if you want to stay local and learn more, it's a 3,000-person conference, October 11th and 12th. So thank you.
And with that, I think that's time. We're still trying to figure out what Satoshi dropped on this earth 9 years ago. Still early, but that was 9 years ago today. So big round of applause for our panelists.